Good afternoon and happy St. Patrick's Day. It is Tuesday, the 17th of March, 2009. This is Brian Shannon from AlphaTrends.net. We had further upside today, and once again, it occurred on light volume. And for the first time in a while, we're back above the 50-day moving average. As I like to point out, it's more important what the direction of the 50-day moving average is rather than where we closed in relation to it. So the direction of the 50-day moving average is still declining, which tells me that we're likely to pull back here sometime soon. The volume pullback as well gives reason for further concern about the nature of this rally. But the fact remains, it closed right on the highs today, and if you were short, you were wrong. You lost money most likely, unless you were scalping intraday. Where we are in the overall picture here on the daily time frame is we're back into this range. We're approaching the midpoint of the range, and we're looking at again that $29.60 level had been very important over the last several months, and looking like it might become important once again. If we take a Fibonacci off of the high from this year to the low of this year, you can see that we're getting very close to that level, and I think that a lot of people are going to be looking at that, and it will tend to become a self-fulfilling prophecy in that area, meaning that people will start backing off the purchases, creating less demand, and we'll start to see more profit taking and perhaps some short sellers in that area, adding more supply. More supply, less demand. Obviously, we get that battle at wages in that area, and that could be the equal opposite force that slows it down before we see a turn lower. When we do look at the 30-minute time frame, though, you can see that there's no sign of slowing down whatsoever. So if you're short, you're early. Yesterday we saw a slightly, actually this morning, lower low in here. Yesterday afternoon, and then the market recovered actually quickly this morning. Let's take a look at the 1 minute time frame. You can see that it in fact gapped up, pulled back a little bit, got back above that daily VWAP, and then continued to rally throughout the day. If you're following along in the blog, I had told my mom to get out of the final position right here at 29.05. Not that I think that we're necessarily at a top, but the overall position was up 7% in the course of a week, and we're at a potential level of resistance here with this prior resistance that had been support. We're up to that 2/3 retracement from the year range as well, and we're running on fumes here. It's lighter volume. We did see heavier volume at the close. Perhaps that's a little bit of short covering, but we realistically we remain in an uptrend. I didn't try to get in at the bottom. I got in when there was momentum for that for her, and now out of the trade. Again, I'm not looking to pick tops and bottoms, but to make 7% in between is a nice trade, obviously. So that was the goal of that trade. What we want to see occur in the Qs right now is this 28.90. We want to see that act as continued support. We do still see a rising 5-day moving average. We also see that since this move began, the average price that the NASDAQ 100 is traded at is right up now at about 28.19. Yesterday it was at about 28. So we're seeing the 5-day moving average that this rally is advancing a little bit faster than the average price. So we're still in a short-term uptrend within a more neutral range here on the daily time frame, and a weekly time frame. We didn't make a lower low on the Nasdaq, so it's becoming more neutral in here as well, and perhaps this is part of the time correction. I think it's still way too early to call the bottom when we have a steeply declining 40-week or 200-day moving average, but clearly there's as many encouraging signs as there are. You can look at the volume has been anemic in here, so it tells you that you still have to be careful and take it each trade at a time, one trade at a time. The Russell 2000 had a very nice day, up 4.6%, and this market, as you know, we were looking at the inverted head and shoulders pattern here that had been completed and broke past the range, or I'm sorry, this trend line that had held it captive. We'd seen the breakout right in here, and we're seeing that this 5-day moving average, which is advancing, did act as support here, very close to it. On the 10-minute time frame, we see that a little bit more clearly. We can take a look also at the volume weighted average price since this rally began, and it's right around this 38.20 level, so that's going to continue to be important. We had seen a higher high in here. Right now we have a low right near about 39.30 that looks to be important. So I think that breaking below 39.30, this 5-day moving average may catch up to it tomorrow somewhere along that area. So that'll be important. And obviously this the just about $38 level, which had been approximately that neckline and a retracement value as well, that's something we want to keep an eye on. If we're looking at the Fibonacci again from this February high to the recent low, we're approaching the 50% level. We've got this area up here near the gap as well, but obviously we're seeing some good price action. The volume continues to trail off though. That's why it's prudent to trim your long positions. I would expect a pullback somewhere in here. Don't be surprised when it comes, and it might come quick because of the overall level of nervousness amongst the longs. Here's another look at today's advanced decline. You can see the advancers swamp decliners, 2,385 advancing stocks, 675 decliners. If we change this to the last, let's change it to 10 days and we'll look at 30-minute time frames. You can see here that the advancers have been ahead of the decliners every single day here since the 10th, and have really swamped the decliners. So breadth, or participation amongst the number of stocks continues to be wide, and that's a good sign for the longs. But again, you have to protect your profits in a primary downtrend. The financials were up again today. This group didn't make a higher high in here though, so continues to be at this important level here and just below the declining 50-day moving average, which makes this level a little bit more important, near $8.60. We've been looking at this level for a number of reasons. We had seen that based off of this high to this high right here in late January to the recent lows, the $8.81 level is about a 2/3 retracement level. And if we look at the take a look in here at the declining 50-day moving average, we can see the value of that is about $8.88 as well. So we're seeing diminished volume, we're seeing bullish action below these important levels, and what we were looking for was what I was hoping would happen would be that we would get a little bit deeper pullback than what we saw today, and perhaps build strength for a greater rally based on an inverted head and shoulders pattern here. I would have really liked to have seen a little bit further pullback, but the buyers are still there. We have the higher lows here on this 30-minute time frame. We have an advancing 5-day moving average, but we're seeing it fall short of this level here. We're seeing again that volume trails off on the daily, so you have to be very careful and have a strategy in mind for locking in your profits if you haven't done so or aren't doing so right now. The average price since this rally began is about $7.80. I explained the psychology of that on my blog earlier, so take a look at that. So you've just got to be very careful up in here. The S&P 500 finished with a $2.32 gain, or about 3%. It's still below the declining 50-day moving average. That 50-day moving average is approaching the $80 level, where we had seen significance based on the prior support in that level right in here that occurred in January. We had broken down, seen that act as resistance, and that's also the 2/3 retracement. So $80 looks like a big level for this market. We're still rallying. We're rallying each day on lighter volume. It's great for intraday trading activity. Again, we saw that a nice open followed by a pullback below the daily VWAP and then a push above it, a couple tests of that, and then later in the day we saw continued strength. We're above the rising 5-day moving average. We're also at a new move high here recently. The average price since this rally began last Tuesday is at about $74.60 now. So some of the more important levels of potential support here are going to be, I think that a lower low right here would lead to a 5-day moving average, so $76.70, and then today's lows right in here. Breaking below that would really pave the way, I think, for a more meaningful correction. And then we would look at basically maybe some of the Fibonacci's off this move for potential support on the downside. So in other words, we would start to look at the height of this move. A 50% retracement would bring it to 73, and that was a prior level. But right now, that's too far. Thinking too far forward because we don't know if this market's going to get 81st before we make those measurements. So if you're still long, I'd suggest you continue to take some profits into this continued strength, and just be disciplined about this. Remember that the primary trend, we've still got a lot of damage that we're healing here, and taking profits makes sense.